All right, welcome back everyone to another video. Thank you for subscribing. If you have not already, please consider doing so. I'm seeing the newest subscribers that I've gained recently. Welcome everyone. I love watching the subscriber count go up. I'm just trying to make these videos, and the more people that subscribe, the more likely I am to put out more videos and better videos, and I read every single comment. So thank you. I appreciate it. Thank you for sticking with me. And this video is actually made because of a subscriber. A subscriber commented on a previous video about Copen, and I decided to make this video in honor of them because I thought this is actually a really great call and a great company. I had no idea what Vuzix was before. Vuzix, tell me if I'm pronouncing that right or wrong in the comments below. So anyway, I've never heard of this company before until someone commented on my Copen video about it. And I appreciate that because now I actually do own a few shares in Vuzix, and I can't wait to see if it goes up, like continuously goes up. Now, this last week was an absolutely rough time in the market. So, I got slaughtered on the Vuzix investment originally, but that's okay because that happens. And I personally think that, I'm going to hold it for the long term. I'm hoping that it's going to grow. So anyway, without further ado, this is the video that I wanted to make about it because I actually did look into it and I said, this is worth making a video about some stock analysis for it. So it actually was in the news recently, Vuzix, because it was on Kathy Wood of the ARK investment funds. It was on her list of recent investments in one of her funds, in one of her ETFs, and she had bought about 292,000 shares. And this is a pretty small company to begin with. It's not that big of a company, and it's not widely known, but they do a ton of VR and AR, so virtual reality and augmented reality plays as far as like screens and visuals and stuff like that. Kind of like Copen. So anyway, so this was a hot stock recently, and it exploded recently, as you can see from December all the way to February. It has just skyrocketed, and more analysts, this time three, are on the call for it. So Vuzix has three analysts giving a strong buy rating, and it has an $18 price target, and right now that's about 2.6% downside compared to where it is right now, this price target. So let's look at the stock analysis of it. And Vuzix is a 10. Again, just like Copen, that's really rare. I rarely see this with stocks. And this maybe, Kathy Wood is, an oracle, I think, of investing, and she might have a crystal ball and can see into the future. Who knows, but everything that she touches lately has turned to gold as far as trends and analysis. So we'll see about that. But let's take a dive into the financials. So Vuzix is one of those companies, kind of like Copen, where they don't have much in revenue. They have not made a lot of money so far. So the money has gone up, but it went down from 2018 compared to 2019, and it's been kind of scarce. 6.7 million in revenue is not a lot. This is a very small company. And then if we go down to the net income, again, it's huge. It's a huge loss, and it actually has grown to be the most in 2019. So that's not really what you want to see, but that is why these are called growth companies usually. And so now let's look at the balance sheet. The balance sheet, they actually have about as much money on the balance sheet, if not more, than they actually made in 2019. So that's a pretty good sign, I guess, that they have a CFO with some wherewithal to continue to pile up the cash balance. As far as they've probably made most of that money through reissuing new shares to shareholders, because obviously they don't really, or getting more investment from outside or loans or something like that, because obviously they don't really have a net income. They have a net loss. So total current assets is 19.1 million, and their total current liabilities is 2.6. This is their strongest part of the balance sheet. They have incredible working capital. They have almost no current liabilities, but yet they've built up a little stockpile of current assets to be way more, and they're definitely solvent when it comes time to pay the reaper. So that's a really good sign. And then for long term, there is no long-term debt. They retired that, and it looks like, they have like operating lease liabilities, but they really don't have much as far as liabilities. So in total, 28 million in assets versus 4 million in liabilities. That's pretty good. That's a pretty good sign. That's a pretty good sign of a healthy company. Someone on the financial side has the wherewithal to keep that low and have no debt. Now let's look at the cash flow statement. So obviously their negative net income starts out at the top, and then if we see down below, we can tell that again, they have not issued long-term debt in quite a while, and they've not repaid long-term debt because they really don't have any. They don't have any long-term debt. That's a really good thing that we want to see, because that could strangle you as far as a company that's trying to grow is constantly trying to make your interest payments and trying to keep up with the long-term debt that you have issued. So that is not an issue at all. So equity issuances. So this is what I was talking about. They have actually issued equity, and they have, that's how they got their money to, they're betting on themselves, saying, we will issue more shares of our company out into the market because there might be a need later on, which clearly they were right, and then they got that cash firsthand because obviously, again, they don't have cash flow. They have, a negative net income. But because of issuing debt, they have actually become positive cash flow, and that does make sense. So, that is an interesting thing, and it's a way to keep their financing activities positive. Like you can see, they've gained quite a bit from their investing activities. And then let's look at a portfolio of Vuzix. So Vuzix, if you had invested in its IPO in May 2010, then you would actually today have $35,000 if you would invest in $10,000 back in the IPO. And that's a 13% compound annual growth rate. That's not too bad. But again, let's do what we did with Copen, which is if we see the annual returns, they've skyrocketed in 2020, and then they've also started to skyrocket in 2021. Again, recently in the news, Cathie Wood, her ARK Invest funds bought some shares, 292,000 of Vuzix, so it's clearly seen as an uptrend kind of play. So let's see, if you had invested $10,000, started in 2020, when all of the VR, AR stuff was starting to blow up a little bit, let's look and see what your portfolio would have been today. So if you had invested $10,000 at the start of 2020, you would have $93,000, by the basically end of February 2021. So in about a year and about 14 months, you would have gained 580% on this investment. And that's incredible. That's a really, really, really good sign of, a growth company as far as, in the last 2 years, clearly, you would have made some gains. And you made a small gain if you had invested at the IPO, but you really would have had to hold on there. And your investment definitely would have been more worthwhile if you had waited until the whole VR, AR play played out. So anyway, let me know what you think. If you've heard of Vuzix, if you like this video, tell me everything, tell me all your thoughts, and yeah, hope you enjoyed it.